Just to set the scene quickly, some of the things I wanted to discuss in this panel are, obviously the topic is creating liquidity for RWAs, so I want to talk a little bit about how to create that liquidity and then the value that could be captured from being early to the creation of that liquidity. A lot of value to be captured, I think, in understanding the nitty-gritty there, and would love to hear more from some of the panelists how they think about it. And the other major topic I want to cover is you tokenize the assets, what now? So who are the buyers? What do they look like, both institutional and retail, and what do they want, and what problem you're solving for them? As a broader theme, I think there's been a reversion to interest in solving like real use cases, real apps, real users, and I want to extend that to this conversation as well, and just sort of getting a sense from all the panelists here on what problem you're solving for people and why on-chain is the right place to do that. So without further ado, maybe I'll just let each of you guys introduce yourselves briefly. I think probably everyone's familiar, but quickly run through. On my side, I'm Kaledora. I am co-founder of Ostium. We are currently the only place anywhere on-chain to long or short the S&P, NASDAQ, JPY, oil, gold, and soon single name stocks with up to 100x leverage. So place for degens to trade RWAs.
Good. Hey, everybody. I'm Chris. I'm the co-founder and CEO of Plume. We're the largest ecosystem network and chain focused on RWAs and bringing the real world on chain, right? And so that includes RWAs. We have a bunch of projects building on us, over 200 projects, 18 million wallets on the chain, and all that kind of stuff. And look, we make it easy to do one thing. We take things in the real world, we turn them into tokens. Right, we turn them into crypto. We make them useful across the DeFi ecosystem, so you can lend, borrow against, you can speculate, you can earn yield, and all that kind of nonsense. And so we'll get into it a little bit after this.
Colin Cunningham. I was at Centrifuge before Chainlink. At Chainlink, I run our tokenization and real-world asset business. So what that means is, for everyone, most I think know Chainlink, but we're the data oracle business and not an interoperability provider. What my role is specifically is thinking a lot about an end-to-end solution that works for traditional financial issuers and traditional financial participants. What does it look like to come on chain and tokenize things? And then what does it mean for those assets to achieve utility and liquidity on chain? And so we work with over 40 blockchains, over 400 DeFi protocols, and we work with many people in this room. So excited to be here.
Should I go again? Yeah.
If you wish.
Perfect. So I'm Kevin, said that before. I think that crypto is a proof of concept as well. So I'm the CEO of Keyrock. We're a liquidity provider, market maker on digital assets. We make thousands of markets on-chain, off-chain, perps, options, futures, spot, you name it. So, and we also work with a lot of people in this room and being happy to discuss our shortcomings in terms of bringing liquidity to RWAs, since that seems to be such a problem.
Cool. Okay, so first question is, you tokenize the assets, then what? I would love to hear from whoever wants to jump in first, but really from the perspective of who are the buyers, why do they have to exist on chain, and what problem are you maybe solving for the first people who are using these RWAs across various DeFi protocols? Whoever wants to go first.
Yeah, sure, okay. If you get me going, I might take the whole time. But okay, I'll try and keep it short. Look, what do we do with our database and what's it? I think, there's two views of it today. One is you take the blockchain, crypto, and all this type of stuff, and you bring it to the real world. You're applying it to a normal sort of like banking environment. You're applying it to different assets, right? And you're making the process more efficient. That's like sort of option A and what a lot of people talk about, right? Let's bring things to the real world. All the liquidity's there, all the buy side stuff, they're great, right? We take the other view at Plume, right? We're saying, look, we take the real world and we bring it on chain, right? And we make these things useful to crypto people. And so for us, liquidity, the buyers, the users are all the sort of on-chain audience today. And what is the on-chain audience, right? It's a bunch of people who generate gambling all over the place, right? It's a bunch of people who like crypto. It's a bunch of people in Latin America, in Africa, in Eastern Europe, in Asia, wherever it might be. Right? Those tend to be like where we bring our assets to and the audience that we sort of formalize and tokenize against. And so what do they do with it, right? Today, there's only so many things, right? What do people do on chain? There's really three things, right? They try to earn, right? Which is yield farming. Right, you're trying to earn some money. Number two, you're trading, right? You're doing, buy, trade, lend, borrow stuff. And three, you're speculating, right? Doing things with leverage and doing all kinds of stuff, right? So today, that's what we do, right? We take real things, we put them into that. And for our audience, it's about taking these assets, whether the US dollar denominated or whatever it is, spreading all over the place and making them useful in a crypto native context, crypto native UX, right? We think that the token is a superior UX and superior format for a lot of these things, right? Which means you want to make things into tokens, make them into crypto, so then people can sort of grab, touch, use, hold, stake, lend, swap, all that kind of stuff, right? And from there, you create utility, you create value, you create a story, and you create volume, and from there, right? That will attract other things to come into the area, right? Whether it's the buy side, whether it's creating net new products or whatever it is. And so that's our approach and how we think about it. But yeah.
Can I ask a follow-up question?
Sure.
Why does it need to be on a new chain?
Oh yeah, totally. We can get into it. So look, I think it's a very good question. Look, we build a chain, right? Number one question is, why the fuck do you build a chain? You know, there's a lot of chains out there, right? And I think it's a very good question. Look, we started off not building a chain, for what it's worth, right? We started off building a protocol to deploy to other chains, right? Very quickly we realized that most chains, even if you deploy things to, like you can tokenize anything, right? The question is who's buying it, what they're doing with it, and what happens after. And we realized very quickly that when you deploy something to a chain, it doesn't mean shit. It's about who buys it, who picks it up, who does something with it. And really, when you get into it, you sort of look at this, we call it network density, which is each chain has a density around a certain use case, certain style. People think liquidity is the answer, right? If you have a certain amount of liquidity, that activity flows there. It's not true. Right? Liquidity, use case, and story, and community all fit into the same thing. So if you look at Solana today, right? Solana today, right? The reason why Pump.fun works so well on Solana and nowhere else. Pump.fun is an incredibly easy product to copy, right? It should be everywhere, as long as there's TVL and there's volume. It's not, right? It's in one place, Solana, right? And the reason is because the Solana community, right, of which I count myself among, right, are people who sort of DCA $5 into a 20K market cap shitcoin, right? And so that's like what that is. And so that's why the product works incredibly well there, right? Versus you look at Base today, right? Base today also, great thing. Base today works more along the sides of like the SocialFi, more like Web 2 normie feel, right? Even their memes are called Brett and Normie instead of the more aggressive things you see on Sol, the racism coins, right? And so like if you look at the Base stuff, right? Today, that's where Friendtech was built, right, and born. That's where Warpcast is coming to play, right? You've got, Jesse and running around like selling pizzas on Base. It's like that kind of thing, right? That's the story for Base. It's a very different feel, right? Even though to a user, right, ostensibly these things are the same, Solana and Base. You can't really tell for the most part, right? And so for us, it's the same thing. We realize very quickly you have to sort of combine the full stack, which is you take software, you take technology, right? You take community, liquidity, ecosystem, community, and you bake that whole thing together so you have the best place to bootstrap this. That's why when protocols come to us and they deploy on Plume, right, they're able to get way more transactions, way more users, way more dollars, way more liquidity than any other ecosystem, right? We're much smaller than all of them out there. People still come to us for that reason because we're focused on this category so we can focus our energy on building this full stack ecosystem for them. It doesn't, like, there's going to be RWAs everywhere, by the way, right? We're not believers that it's going to be just like one place. I think it's, look, at the end of the day, RWAs are supposed to grow everything, right? It's not just about Plume, but for us at least, all the different esoteric things, and we can just go a little bit faster, bring them in, right, and then spread them across everywhere.
All right,
Let me jump in with a thought. So the other reason we create new chains is it's the only way net new capital flows on chain, in my opinion, in any significant way in an institutional manner. Meaning, for every corporate, for every traditional financial institution, for anybody that has a venture or innovation arm inside of their business, they want upside participation in the blockchains, right? So when new blockchains launch, they're going to get access to that. Then they're going to provide liquidity into the projects launch there. And that's how we get from 3.1 to 3.2 to 3.3 to 3.4 trillion, right, in AUM on chain. So I actually think launching new blockchains I'm totally fine with it. I think we should have as many as possible because right now I don't see any other way that net new capital is flowing on chain in any significant way. So that's my take.
Interesting take. I think that's probably been the case until now. I do wonder what you think about. I mean, ultimately, I think a lot of the value is shifting or will shift over the coming years more towards the application layer, simply because applications will own the experience with the user. When you think about, I mean, this is a pretty standard example.
Crypto native applications?
Look, I think every crypto native application, or most ones that are not just really deep down in the infrastructure stack, to accrue value and have real users and have a moat, will have to have a direct relationship with the user and ultimately extend beyond the existing on-chain audience. I think you should think of users as basically concentric circles. You start, like I haven't seen a DeFi app that's taken off that didn't first focus on an initial on-chain user base. But if you don't have a pathway to being legible and usable and interesting and actually adding value for someone who's not on-chain today, I think it'll be tougher to have staying power.
Yeah, for sure.
And I think value will flow through applications. Like, anyways, that's my personal opinion. But I think that's what you're saying has been true until now. I just think it'll probably change. But
I think both are right for us. They're not just trying to be a nice guy about it, but like I think they're both true. In the sense that
we know.
I'm not usually a nice guy, but like I think they're both true. I think the value is going to flow to the application. There's no question about it. It just takes time. It just takes time, and I still think we're in the very early stage. I think a net new user flow into crypto is still very low, right? The
Oh,
net new user,
100%.
the sort of absolute user count user, still very low. So it's still happening. Now, the products are getting better as they get here. For sure, we'll follow the application, but we're still transitioning.
I would even say the data already bears this out, right? Look at Pumped Out Fun, doing like more annual revenue than a lot of other chains. And part of the reason that people actually come and onboard Solana in the first place is to use that app. Ultimately, like, we're visual creatures, and I think humans have a more of an emotional attachment to the thing that they interact with that is visible. And as chain abstraction gets better, the chain matters less and becomes less visible, and the application becomes more salient in their mind.
Yeah, I agree.
So maybe jump in with a thought. It's like, I actually think it's not going to be crypto native applications over the next 3 to 5 years. I think we're going to start to abstract away back into the traditional Web 2, or what were you calling it? The messy middle?
Messy middle. I don't like Web 2.5 because it sounds really mid-curved, but messy middle is like people with a phantom wallet who their roommate made them buy a shitcoin, but they like mostly are trading options on Robinhood.
Yeah, so I think that's where I actually agree. Curious to get your take, Kevin. Is like, even if we do DeFi native, even if it aggregates to the aggregation layer or the application layer, like, we're still playing with proof of concept money, right? Like what MakerDAO just announced and everything that went down with $1 billion there. It's great. It's still not even scratching the surface of what TradFi is interested in. So I think if we're really going to start thinking about that next layer of liquidity and utility, I think we're going to have to find a way to, I don't know what the right way is to phrase this, but the experience is going to have to be native to where all the clients have already been won, and all those clients and all the users are sitting within traditional financial institutions. But maybe to you, curious to get your take on what this is going to look like.
Just to react on what you just said, and believe me, as a market maker, I'm very honored that liquidity is always at the center of everything that we talk about. But I do think that you mentioned, how it's going to go about liquidity and then utility, and I think it should actually be the other way around. And so also reflecting on your question, you tokenize the asset, then what? Well, I think you should ask yourself a question before you actually tokenize the asset, is why are you tokenizing it? And what is it actually going to bring? And I think that when you look at it this way, it explains a lot more easily why stablecoins are the one biggest use case, because there actually was a use case. It's like, I actually want to be sending dollars around and do it that's much faster than I'm currently doing it. Wait, maybe I can tokenize it and then work. And I think that now we have a bit of a tendency to do this the other way around. Is like, let's tokenize something that nobody wants in the first place, and hopefully that it's a token, they're going to want it, and actually they don't. And that's where you end up with your liquidity problem. But bringing liquidity, us being there in the book, ready to buy and sell, is not going to do anything if there's nobody wanting to do the other side of the trade, because they cannot use what they're buying or selling for anything. So I think that whether you're starting from the new blockchain perspective or where the aggregation is going to be at the application level, I think that first and foremost the logic should be, what is this going to be used for? And is tokenizing it actually making it better? And do I have the rest of the infrastructure in place to actually serve that use case? And I think that's what's going to bring the next wave.
I couldn't agree more, and I'd frame it as, I think as the market gets more competitive, it will actually force us to think more from first principles of like solving problems rather than like as the market is more competitive for liquidity, you will actually have to solve a problem rather than there just by default being liquidity simply because it's novel. This is a good segue though. I want to get more into liquidity and specifically a question for you, Kevin. I'll maybe just use one example like from funding rate arb, which I think is illustrative. So I think there's probably certainly unique value to be captured and basically being this bridge between on and off chain. And I'm curious how you think about capturing that value. Use an example. So if people are already, like funds like Keyrock are already doing bridging between on and off chain, right? If they're, for instance, arbing funding rates between Hyperliquid and Binance, you have to go and open a position on both sides. You have to rebalance your collateral, et cetera. But you can do this fairly easily because you can send money directly from Binance to Hyperliquid, whatever you want to go on chain. That becomes a lot more complicated if you have to start to run those sorts of arbs between a position that on one side is on chain and the other side is on interactive brokers or on the CME or somewhere else. So there's also a lot of additional complexities to manage, from managing like gap risk, or how do you handle out of market hours, all those sorts of things. How do you guys think about like building unique value in being that bridge between on and off chain? And what are some of the sorts of considerations that a very crypto native audience might overlook that are critical to actually executing on this stuff well?
On what you just described, actually, it really informs the public that we're talking to, because what you describe as being very easy, doing this arbitrage between Binance on one side, an on-chain DEX on the other, if you speak to a TradFi audience, that's extremely complicated. And so this has become very easy because that's where we started, right? Now, if you consider the possibility to do the arbitrage between DeFi and traditional finance, is just about building the bridges. Yes, today it's complicated, and that's part of the chicken and the egg problem that we have now, is that nobody's willing to do it because there's nothing to trade on it. So why make the investment? But if nobody makes the investment, then you're just back at square one, right? So the way I look at this, I mean, for us, we know that this is going to happen eventually. So it does make sense to make the investment and be one of the first to do it, the same way that we were one of the first, 5 years ago being active, on chain, and 7 years ago integrating, many different centralized exchanges to trade. The thing is that you might say that, okay, nobody's going to do it, so there's going to be incredible value to capture. Yes, theoretically, you're going to have great margins, but you're going to have no volumes at all. So again, it's always about finding the right balance, but I genuinely believe that liquidity follows once liquidity is really a problem, and that comes from the token and the product actually being used. And that's where you say, oh, this is actually being used. Yes, it's still small, but now it's actually worth it to be there and make that initial investment to support, basically the fire has started, let's put some fuel on it. But if you just start with the fuel, you still have nothing.
When's the right time?
I think we're getting close to it, which is why I'm here.
We should talk.
Definitely.
Okay. I want to talk a little bit about integration and composability. Obviously, composability is a huge unlock for anything on chain. How do you, I think an obvious potential issue, or maybe very serious issue, is that the main constraint that we have on chain is in like a non-KYC environment, you can't really have any under-collateralized lending. And that seems like one of the biggest problems to basically expansion of the use cases of an asset on chain. I don't know, Colin, maybe you want to jump in, or Kevin again. How do you guys think about the benefits of composability for some of these assets, being able to do stuff you couldn't do in the traditional markets, but also some of the drawbacks? Maybe there's something else beyond the fact that you can't do under-collateralized lending, or maybe there's a solution you have in mind. There's a bunch of stuff you can do on chain, but there's also some things that we unfortunately can't do yet that might be perhaps even worse than, or have a bigger drawback than the benefits that composability offers.
I guess the way I think about it is I think under collateralized lending is going to make a comeback. I think that's going to start happening a bit more on chain. I think when I think about composability, I've started thinking a lot less about it chain to chain and thinking a lot more about an end-to-end infrastructure that plugs into traditional financial systems. So what I mean by that is like, what does it look like for the traditional banking system and some of the things that are happening for, some of the work we do at Chainlink with like Swift and DTCC? What does it look like to kind of create the composability at that layer between the off-chain and on-chain? To your point, the bridges. I think that's where we start to get to these massive unlocks on-chain. I think the second point I would make is when I think about kind of like under-collateralized lending, I think we're going to start seeing a bit more of that from the traditional financial institutions, and I think data plays a large part of that, and the type of assets that are being brought on chain. So I guess the way I'm looking from our role at Chainlink is just end-to-end outside of just the on-chain world that we're into today, and what does it actually look like to kind of bring some of the more traditional financial institutions on-chain and into the conversation. And I can tell you, and I'm sure many of you are having these conversations as well, but things like Athena are really grabbing the interest, I think, of a lot of these organizations. I mean, maybe more curiosity rather than execution, but I think those things are quite good for crypto and the blockchain world as a whole, as I think it's really kind of perking up the ears of TradFi institutions who want to get in the game.
Can I ask you just one quick follow-up question? When you say, I think we often use the term institutions. It's this like very blanket term. Institutions is many, many different things. In the same way that we use the term RWA to refer to like literally everything that's not crypto, which a TradFi audience would perhaps consider reductive at best. What do you mean when you say institutions? Like, give me an example of 2 to 3 different archetypes of quote unquote institutions that are interested in like what are the different problems that you're solving for each of them?
I just think it's the world's largest asset managers, right? And so what I think they're starting to think about is they're not thinking about how do I go get, $1, $2, $3 billion on chain through the kind of like what we were talking about earlier with new chain launches, X amount of capital on chain, go find that capital in that chain. I think they're asking 2 things. One, if I go launch my asset or I bring new assets on chain or I tokenize them and I put them in an ecosystem, what are we doing beyond initial capital allocations as TVL grows? Specifically, what is the utility that's being unlocked, right? Who's buying this stuff and what are they doing with it on chain? I think the other thing, and I've told a couple of people in this room, is that I'm kind of started seeing a U-turn, right? And the U-turn is, okay, I kind of see what's happening in the Web3 environment and in crypto native environments here. How do I actually take some of the best of that composability and some of the things that have been bought and are being used? Think about borrow and lend markets on Aave Morpho against traditional real-world assets. How can I take some of the, the proof of concept phase that we're still in 7 years later? How do I bring that back into a traditional environment and put it back in front of my client base that I've worked 75 or 80 years, and get them to allocate to that through a traditional Web 2 UI or UX. So that's how I'd answer that.
Anything else you want to add, Kevin, or
Yeah, Kevin.
either of you? No?
Actually, no.
No? Okay. All right. I want to talk a little bit more about adoption and sort of going back to the theme of like, whose problem are you solving? I think, Chris, one thing that you've done is trying to build out buy side before sell side. And I want to just press a little bit more on that point and maybe force you to maybe a rigorous answer on who is the specific person, right? Like, what problem are you solving? Like, give me, like, how old are they? Where do they live? What can they not do in the traditional? Is it that they can't trade a stock in their traditional broker? Is it that they can't get leverage? Is it that whatever it is, like, what is, and I'm sure there's many different problems, right? So feel free to go into any of them.
It's like anything. There's many different types of users, and so I'll try and keep it to something more concrete. But look, the broad scope of it is the crypto native user, right? Now, what does that mean? There are multiple archetypes of that. There's the small crypto user, right? The retail user. There's more like, your classic like SMB, but on chain, right? Then there's also more like your classic, like, quote unquote, institution, but on chain. But these institutions are very different. I just mean as a sort of size wise, right? And those are, maybe foundations, family offices, individual whales who made a couple $1 billion holding BTC or whatever, like those are the kinds of things, right? What are they trying to do? They're trying to do regular things. That's all they're trying to do. But they grew up on chain, in crypto. Everything is on chain for them, and they cannot do anything outside of that. And so that's what they're sort of coming up against. They're hitting the limits on what they can do on chain, because it turns out, what can you do on chain? You do more on chain shit. That's really it, right? And what can you do? You can buy shitters, you can buy normal things, you can leverage on, that's what you do. But like, they want to interact with the real world in different ways, right? And they're unable to do so today, right? Because they can't, really get out of these positions, or they kind of want to hold BTC still. And look, BTC today, what can you do? Take out $1 million in loan, right? You can't really do anything with it yet, right? So it's very difficult for people to continue to interact with the world when you grew up and you were born in crypto, right? And so that's the user that we're talking about today. Now, that can be anyone from someone in, we have a bunch of users and folks in Latin America, right, who get paid in crypto, who hold their value in crypto because their currency is just going to shit, right? Or it's someone that's the largest whale, or like a large family office, or a hedge fund, right, who holds a bunch of money on chain, doesn't want to keep going on and off ramps depending on what the situation, just wants to hold things there, right? And so that ends up being the sort of like archetype, right? It's really someone who's born here, who lives here, who doesn't want to interact with the real world outside of what they know, and it's not out of a fear or not. It's just it's comfort. Right, they grew up on it. That's what they're comfortable with. It's not even that they don't trust it; they just don't know how to do it, and so they prefer to come here. And when you have several $1 billion, things can usually come to you.
And what's the most frequently requested thing? Is that they want to hold treasuries and they want to earn interest? Is it that they want to get access to the real estate market? Like,
it's a bunch of things, right? But I would say the starting point again is really just mostly yield, right? It's mostly just earning yield outside of.
What happens when interest rates go down? Jay Powell was very nice today.
Yes, he was. We're getting there, but we're still neutral. But look, then it's holding up. I think you've seen, broadly speaking, right? The interest was mostly in T-bills before, because it was just yield, right? But we all knew that was a starting point. That's not it. Look, T-bills are boring as shit, right? So that's the first part. And now people are moving into other things, right? They want private credit, they want short duration, but they want CLOs, corporate debt, sovereign, and like they also want to mix things and match, right? To create different types of products that you don't have before, that sort of mix crypto and the real world, right? That's where they're going right now, and that's where things are going to come into play. But that's the user, right? And that's why you have to design the product to fit their use case, right?
All right, I've just been signaled I only have 2 more minutes. I guess last sort of lightning round of questions is, what do you think is the next killer use case for an RWA after stablecoins? What's the next big thing? What are people going to want to do on chain? There's a lot of speculation right now on Twitter about, equities on chain. Is it equities for the average retail user to be able to go in long and short that with leverage or something? Is it being able to get access to the New York real estate market? Well, maybe it's something I haven't mentioned at all. What's the next big thing? What's the next killer app after stablecoins?
Please.
I was going to say stocks just to avoid your follow-up question, but I don't know if you want to go first.
I was going to say I'm bearish on everything, to be honest. I think that most things that were trying to be mirrored on chain are not going to have big product market fit. There's some things that might work here and there, but I'm generally not bullish on it. Which, if I were to pick anything, I'd pick equities and pick I think speculation, right? Because again, I think the on-chain audience today, even if it increases by a little bit, we go from 99% on-chain people to 95% on-chain people. So what do they still do? It's still speculation, it's still yield, it's still the standard stuff, right? So what is actually going to be the next killer use case? I think it's always, if you look at across the history of technology, it's always net new things that attract new users. It's not about mirroring, thing A to thing B, right? It's not that we just, went from on-prem to the cloud and copied the same shit and that's what happened. And then going from this to mobile and something. You have a net new product and a net new thing built for that use case. And so what are the dynamics of crypto, right? It's about permissionless, it's about composability, it's about speculation. So I think there's things that combine those elements that end up being net new. And I know it's pretty vague. I can give you more like concrete stuff on it. But like, for example, we have a protocol that lets you take out like a 50x lev long on Pokemon cards as a simple example, right? Like that's like it's not something you do normally in the real world today, right? And it's not something you can do, right? We can go even more esoteric. One of them is you can take like a 20x lev long on, you can like long America, you can short Korea, right? And like what is behind America? It's a bunch of attributes, a bunch of data about different things that you can combine and weight in different ways to create a chart and create an index around this thing. So that's something you can't do today in the real world, right? And so to me, those are the things that end up being interesting, which means definitionally, I don't know a lot of them because they're net new, right? But the ones that I have seen, those things I get excited and those things I see, bring people in and at least attract the new attention. Will it stick? We'll find out.
Colin?
I think we're going out the risk curve, right? Just like you were talking about with interest rates going down. So I think CLOs are coming back. I think we're going to start to see some more interesting private credit, hopefully, in the real-world asset space. But I don't think we need to get too fancy. Like I think we're still in a moment of education and kind of like market development, where I think we're still educating crypto more broadly about what real-world assets are, how they can be used in these systems. I think we just need to keep getting through cycles, to be honest. I don't think we need to go too much. To your point, I don't think we need to do a bunch of crazy shit and to throw a bunch of new use cases out there. I think we need to continue to put good products on chain. People need to continue to need and want and buy and use those products. And we need to create more composability and more proof that the system works. Like if you think about TradFi cycles, right? These things take 10, 20, 30, 40, 50 years. We've been doing this. How long has real-world assets been around? 4 or 5 years, right? Something like that. Like meaningfully, I guess that's...
Well, because the stablecoin is 10 years.
Well, yeah. I mean, you get the point, right? What is the real-world asset industry? $4 billion, right? We've been like through a couple of years of cycles. All right. Okay. All right, Kevin, your turn.
I already answered, actually. I did say stock, and I'm gonna stick with that. Yeah.
All right. Thanks, guys.
Thanks.
Woo! Thank you.